I want to talk to you about an emotion today. Not fear, not greed, not overconfidence. Those are the emotions everyone warns you about. Those are the ones that get all the attention in every trading book, every trading course, every trading video you have ever watched. Today I want to talk about a different emotion. One that nobody in the trading world talks about. One that most traders have never considered as a factor in their performance. And I am going to argue that this one emotion, properly understood and properly cultivated, will do more for your trading than any strategy, any indicator, or any risk management rule you have ever learned. The emotion is humility. Stay with me, because I know that word might not sound exciting. Humility does not sound like something that makes you money. It does not sound like a trading edge. It does not sound like the kind of thing that separates professionals from amateurs, but it is. And by the end of this video, I'm going to show you exactly why. Let me start by telling you what humility is not. Humility is not weakness. It is not self-doubt. It is not the absence of confidence. It is not trading small because you are afraid to trade big. It is not second-guessing yourself on every entry. It is not apologizing for having an opinion about the market. All of those things are actually the opposite of humility. They are forms of fear dressed up to look like caution. Real humility is something completely different. Real humility is an accurate assessment of what you know and what you do not know, what you can control and what you cannot control, what your edge actually is versus what you wish it was. Real humility is the ability to look at the market and say, I do not know what this is going to do next. And I am completely okay with that. That is not weakness. That is the foundation of every good trading decision you will ever make. Let me tell you where the absence of humility leads. Because most traders have experienced this firsthand, even if they never identified it by name. You have a good week, 3 winning trades in a row, maybe 4. The account is up. You feel sharp. You feel like you have figured something out, like you finally understand the market, like your read on price action is dialed in. And from that feeling, that warm, confident, I have got this feeling, you start to change how you trade. You increase your position size. Because why not? You are clearly in a good run. You start taking setups that are slightly outside your rules. Because your instincts are working right now and your instincts are telling you this one is good too. You hold trades a little longer than your plan says because you feel like you can read where this is going. You stop following your checklist as carefully. Because you have been doing this long enough now and you know what you are doing. And then the market does what the market always does. Eventually, it humbles you. One trade goes against you, then another. You increase size again trying to recover. That trade goes against you too. By the end of the week, you have given back everything you made in the good week and more, and you sit there wondering what happened, what changed, why you were so good last week and so bad this week. Here is what happened. Last week you were trading. This week you were being arrogant. And arrogance and trading are completely incompatible. Mark Douglas talked about this pattern constantly. He called it the cycle of boom and bust that destroys most trading careers, not one catastrophic blow-up, but the repeated pattern of building something and then giving it all back. Building and giving back, over and over. And at the center of that cycle, almost every time, is the absence of humility. The good run creates false confidence. The false confidence creates rule breaking. The rule breaking creates losses. The losses create desperation. The desperation creates more losses, and the cycle continues. Humility breaks the cycle. Here's how the humble trader has a good week. 3 winning trades, 4 winning trades, the account is up. And the humble trader thinks, my edge worked this week, the probabilities went in my favor. Next week, the probabilities might not. So I trade exactly the same way next week as I did this week. Same position size, same rules, same checklist, same process. No size increase because the ego wants to capitalize on momentum. No rule bending because confidence is high, just the same clean execution of the same process. Because the humble trader understands something that the arrogant trader does not. A winning streak is not evidence that you have figured out the market. It is evidence that your edge worked on those specific trades, which is exactly what your edge is supposed to do sometimes. The market did not change. Your skill did not suddenly increase. The probabilities just went in your favor for a few trades, as they will sometimes, as they are supposed to. Humility keeps that perspective, and that perspective keeps you consistent. Now let me show you the other side of this. How humility helps you during losing streaks. You have a bad week. 3 losing trades, maybe 4. The account is down. You feel frustrated. You start questioning everything. Is my system broken? Am I doing something wrong? Should I change my approach? The arrogant trader responds to a losing streak in one of 2 ways. Either they deny it. They tell themselves the market is wrong. The setups were valid. The losses were bad luck. They ignore the feedback and keep trading the same way, often bigger, trying to force results. Or they panic. They conclude their system is broken. They abandon it. They start looking for something new. They take trades outside their rules, trying different approaches, and they create a mess that takes weeks to clean up. The humble trader responds completely differently. They look at the losing streak honestly. They review each trade. Was it within the rules? Was the execution correct? Is there a pattern in these losses that I need to understand? If the losses were within the rules, if each trade was a valid setup, correctly sized, correctly managed, then the humble trader accepts them. Losing streaks happen. This is probability. Keep executing. If the losses were outside the rules, if there was slippage in execution, if stops were moved, if positions were oversized, then the humble trader identifies the pattern and corrects it. Without self-punishment, without drama, just honest assessment and adjustment. The humble trader can receive feedback from the market. The arrogant trader can only fight it. And here's the thing about the market. It gives feedback constantly. Every single trade is feedback. Every losing streak is feedback. Every time you break a rule and it costs you money, that is feedback. But you can only hear feedback if you are humble enough to listen. If you approach the market with a genuine belief that it might know something you do not, that your analysis might be wrong, that your current approach might need adjustment, arrogance makes you deaf to feedback. And a trader who cannot hear feedback cannot improve. Now let me get practical, because humility is not just a mindset. It shows up in very specific behaviors, and those behaviors directly affect your performance. The first behavior that comes from humility is respecting your stop loss. A stop loss is an admission. It is saying, if price reaches this level, my analysis was wrong and I am getting out. A trader without humility cannot make that admission. They move the stop. They tell themselves the trade will come back. They rationalize holding a losing position because admitting they were wrong is too painful. A humble trader places the stop before they enter, and they honor it when it is hit, without debate, without rationalization, because they already accepted before the trade began that they might be wrong. The stop is just the mechanism for acting on that acceptance. Every time you honor your stop loss, you are practicing humility. You are saying, the market is telling me this trade is not working and I am listening. Every time you move your stop, you are practicing arrogance. You are saying, I know better than the market and I am staying in this trade. Over a large number of trades, humility wins, every time. The second behavior that comes from humility is trading smaller than your ego wants to. Your ego wants to trade big. Big positions feel serious. They feel like you are committed. They feel like you are confident. They feel like you are a real trader. But humility looks at a big position and asks a different question. Can I manage this position with complete emotional clarity? Can I follow my rules at this size? Can I honor my stop if it is hit without flinching? If the answer is no, if the size creates emotional pressure that interferes with execution, then the humble trader reduces the size. Not because they lack confidence, because they understand that emotional clarity is more valuable than the potential extra profit from a larger position. This is one of the most counterintuitive things in trading. The humble trade, the smaller, almost boring position, almost always produces better execution than the confident large position, because the small position lets you think clearly, and clear thinking leads to better decisions. The third behavior that comes from humility is constantly reviewing and learning. Arrogant traders do not review their trades. They already know what they are doing. They do not need to look back. They are focused on the next opportunity. Humble traders review everything. They keep detailed journals. They look at every trade honestly. They ask uncomfortable questions. Was that entry clean? Did I follow the rules? What was I feeling when I made that decision? What could I do better next time? This constant honest review is how traders actually improve. Not by finding better strategies, by finding better versions of themselves through honest self-examination. Mark Douglas said that self-honesty is the rarest quality in trading, and it is the most valuable, because you cannot fix what you cannot see. And you can only see clearly when you are humble enough to look at yourself without defense. The fourth behavior that comes from humility is accepting that you do not know what the market will do next. This sounds simple, but watch how most traders behave and you will see it is anything but simple for most people. Most traders enter a trade with a story. The market has been in an uptrend. This pullback is a buying opportunity. Price is going to bounce from this level and go back to the highs. That story creates an expectation, and the expectation creates attachment. Now, you are not just in a trade, you're invested in a narrative. You need the narrative to be correct. Because if the narrative is wrong, you were wrong. And we already talked about how much the ego hates being wrong. So when the market does something that contradicts the narrative, the trader fights it. They hold the losing trade because the narrative says it should come back. They add to a losing position because the narrative is still valid in their mind. They ignore the feedback the market is giving them because the narrative is louder. The humble trader enters the trade with a thesis, not a story. A thesis is tentative. It says, based on these conditions, there is a probability that price will move in this direction. But I acknowledge that I do not know with certainty, and if the market shows me I am wrong, I will exit that tentativeness. That genuine acknowledgement of uncertainty is not weakness. It is the most accurate way to think about any trade, because uncertainty is the actual nature of every trade. The humble thesis allows you to respond to what the market actually does. The arrogant story forces you to fight what the market does, and you already know who wins that fight. The fifth behavior that comes from humility is being willing to do nothing. This is one of the hardest things in trading, especially for competitive, driven people who are used to taking action to get results. The market does not always give you good setups. There are days when the conditions are choppy, unclear, unfavorable. There are days when nothing on the chart meets your criteria. There are days when the right move is to close your platform and do something else. But the ego cannot accept that. The ego says you should be trading. Real traders trade every day. If you are not taking trades, you are missing opportunities. You are falling behind. And From that ego-driven pressure comes some of the worst trades ever taken. Boredom trades, forced trades, trades that barely meet the criteria, trades taken just to feel like you are doing something. Humility says, there is no valid setup today. I am not trading today. That is okay. The market will be there tomorrow with better opportunities. Doing nothing when there is nothing to do is one of the most sophisticated trading decisions you can make. It requires the humility to admit that you cannot force the market to give you setups, and the patience to wait until it does. The traders who can do this, who can sit on their hands when the conditions are not right, protect their capital on bad days, and are fresh and disciplined on good days. The traders who cannot do this grind away their capital on bad days and are emotionally depleted and oversized on good days. Now I want to address something directly, because I know some of you are thinking this. Does humility mean you can never be confident? Does it mean you always doubt yourself? Does it mean you can never trust your instincts or your analysis? No, absolutely not. Humility and confidence are not opposites. They coexist in the best traders. Confident humility sounds like this. I have studied this setup extensively. I have traded it hundreds of times. I know its characteristics, its win rate, its typical behavior, and based on all of that, I have genuine confidence that my edge works over time. And at the same time, I do not know what this specific trade will do. I accept that it might lose. I have sized it so the loss is manageable. I have placed my stop at the logical level, and I am completely okay with whatever the market decides to do. That is not weakness. That is the most sophisticated form of trading confidence there is. Confidence in the process. Humility about the outcome. The arrogant trader has it backwards. They are confident about the outcome. This trade is definitely going to work. And dismissive of the process. Rules are for beginners. I know what I am doing. The humble trader is confident about the process and humble about the outcome. And over time, process confidence produces results. Outcome confidence produces blown accounts. Let me bring this all together. Every lesson in trading psychology eventually comes back to one thing: your relationship with the market. Whether you see it as something to be conquered or something to be navigated. Whether you approach it with the arrogance of someone who thinks they can predict it or the humility of someone who knows they cannot. Mark Douglas spent his career watching traders fail because of arrogance. Not stupidity, not bad strategies. Arrogance. The belief that they knew more than they did, that they could control more than they could, that the rules applied to other traders but not to them, and he watched traders succeed because of humility. The willingness to be wrong, the willingness to take a loss cleanly, the willingness to follow a process even when the ego screamed to deviate from it. The willingness to say, I do not know what the market will do next and I do not need to know. Humility is not the absence of an edge. It is what allows your edge to work, because your edge only works when you execute it consistently. And you can only execute consistently when you are not fighting the market, not fighting your rules, not fighting the outcome of every trade. Humility removes those fights. It lets you trade cleanly. It lets your process breathe. It lets the probabilities play out without interference. And interference, as we have said many times on this channel, is what destroys edges. So cultivate humility, not as a personality trait, as a trading skill, a deliberate, practiced, intentional skill that you bring to every session, every trade, every decision. Honor your stops. Trade smaller than your ego wants. Review your trades honestly. Acknowledge uncertainty before you enter, and be willing to do nothing when there is nothing to do. Those 5 behaviors practiced consistently will produce something remarkable over time. Not just better results, a better trader, a more honest, more disciplined, more self-aware trader who can navigate whatever the market throws at them, because in the end, the market will always find your weaknesses. It is designed to. It tests every fear, every insecurity, every arrogant assumption you bring to it. The humble trader walks into that testing environment prepared, not with certainty about outcomes, but with honesty about limitations. And that honesty is the most powerful trading tool you will ever have. If this video gave you something to think about today, if the idea of humility as a trading skill landed differently than you expected, hit that like button right now. Subscribe, because this channel is about the real work of trading, the internal work, the work that most people skip, the work that actually changes results. And leave a comment below. Be honest with me. Where does arrogance show up in your trading? Is it after winning streaks? Is it in how you size your positions? Is it in how you respond to losing trades? I read every single comment. Everyone, take care of your capital. Stay humble. Stay in the game. See you in the next video.